Coa Nigeria Limited. That the Coa Nigeria Limited has been in business since 2009 as a manufacturer of sugar cubes. The company sources its sugar
Excuse me.
cane from the northern part of the country.
Hello.
Ah,
When you are faced with questions like this, it's better you read the requirement first so that you know how best to attempt the question. It's better if you read first. So we are told to determine the company's tax liability, right? We are told to compute the company's income tax liabilities for relevant years of assessment. So you can read now. Let's go ahead.
that the Coa Nigeria Limited has been in business since 2009 as a manufacturer of sugar cubes. The company sources its sugarcane from the northern part of the country. However, due to activities of some miscreants which prevented some of the local farmers to go about their farming activities, the company has been facing a lot of issues in getting the needed raw material for its operations since 2016. The company has issued with tax authority on the treatment of some items, such as allowing and disallowing donations and dividend received at will in the financial statements submitted and annual returns filed. The high overhead costs, particularly energy costs, make the operating environment not encouraging. In order to address this unpleasant business situation, the board of directors of the company, at its special meeting held recently, decided to close business operations temporarily or in the long run, relocate to a neighboring country if the situation does not improve in the coming financial year. As the company tax consultant, you were informed of the decision of the board by the general manager when you visited the company to obtain documents that you intended to use to conduct tax audits and file statutory tax return in aspect of the just concluded there. He was of the opinion that a professional advice would be highly needed, as he did not want the organization to go on temporary closure next year or relocate to another country. In the course of your discussion, you suggested by way, please choke down, sir. Please slow down.
I have.
Okay,
Please, if
thank
your
you.
background is
In the course
noisy,
of your discussion,
may
in the
please
course of your discussion,
go
you
ahead.
suggested way by which issues raised by the board could be addressed. The general manager was pleased with the informal submission and decided to inform the managing director. A meeting has been scheduled between the managing director and your firm next week. The profit or loss account in respect of the operation of the company for the year ended December 30th, 31st, 2021 is as follows: that the Coa Nigeria Limited statement of P&L for the year ended December 31st, 2021, turnover, inventory, purchases, carryover. Should I continue, sir?
Go ahead.
Okay. Turnover 382 million
No, no,
500.
no. All figures are assumed
Opening.
correct.
Okay.
Go ahead now.
Okay. Extract from the company statement of financial position as at December 31st, 2021.
All figures
Non-current
are assumed.
assets, current assets. Okay, the following additional information was made available. Miscellaneous, please hold on, sir.
No, all are assumed correct. So let's start work so that
Okay,
because everything I'll still have to repeat it again. So not in order not to waste our time or to use more of our time, sorry, uh, it's just advisable that we get the whole gist. Having said that, I will advise that you all follow so that you will not allow this thing to look like film trick. Please follow me gently. In case you have question, note down your question or questions. The way it's going to work tonight is that I will finish solving before you ask your questions. So in case you have question or questions, you would do yourself a favor of noting them down and then asking after the class. Do you get it now? That is how it's going
Yes,
to,
sir.
because we have a lot to do. Hopefully I should be able to solve 2 questions today. So the questions you would ask may be dragging us behind. Another thing again I want to tell you is that if you have the link to the Excel sheet, it will be updated automatically. The solution is going to be updated automatically. So you don't really need to, by now I expect everybody to have saved the sheet. So if you have this sheet already, it's going to update automatically. The sheet I've been using to solve questions. So
Please, can
uh
you help us to resend the link? Thank you.
all right, I will try
So,
today to send it, but
sorry,
ideally,
how can we save this?
just put the link, bookmark the link on your Chrome, or just copy the link and paste it anywhere that is safe for you. You can
Okay,
bookmark it on Chrome
okay.
or just copy it and paste it somewhere. But the reason I chose this sheet is you have all your solutions in one sheet, in one single document, and at the same time, I don't want to be sending over and over again, right? So the first step to computing your tax liability is to compute your adjusted profit, right? Computation of adjusted profit for what is the year of assessment. So let me bring it to one single doc. All right, are we still together? All right, so computation of adjusted profit for the first thing you want to check is the year of assessment, and the year of assessment is determined by the profit or loss statement you are given. So the profit or loss statement you are given is for December 2021. So the year of assessment is going to be for 2022 year of assessment. Oh, I hope it's making sense for you. The first thing you want to do is to determine your net profit, your net profit, and your net profit based on what you have here on this question. Your net profit or loss, in this case it is loss, is 6,530. Let me make it financial. So we have loss, add disallowable expenses. The ọ̀gá pátápátá of the disallowable expenses, like we said in the last class, is depreciation. That's the ọ̀gá pátápátá of them. So depreciation now is the first one that doesn't have any issue with, or we don't have any issue with, and the amount here is 35,000.
Hello, sir.
Hello, sir.
Please, I asked you this thing on WhatsApp in your DM, but you have not replied. That rent that you told us in our last class, please, can you tell me the meaning again? Wholly, reasonably, exclusively, and what's the last one, sir?
Necessary.
Necessary, okay.
Oh. Like I said, okay. Let me like I said, Daniel. All right, depreciation is this. So under one we are so sure of is loss on disposal of foreign equity shares, because foreign equity shares is an investment, right? So loss on disposal of investment, loss on disposal, we are so sure of that. Loss on disposal of investment. That's how much? That's 1,750. Right. So let's check for any other thing we are so sure of. We are sure of stamp duties for increase in share capital. Stamp duties for increase in share capital. So let's include that. Stamp duties for increase share capital. That's 1,005. Is there another thing we are so sure from the face of this thing? Okay, it looks like we've picked the whole thing we are sure of here. So let's check the additional information, because the additional information will help us. Miscellaneous income. We are not dealing with income yet. We are dealing with expenses. So I will skip it for now because I'm not dealing with income yet. I'm dealing with expenses. So I have legal and professional fees. Okay. Debt collection expenses is allowable. Tax consultant fee is allowable. Renewal of short lease is allowable. Retainers fee is also allowable. Right. Then let me go to repairs and maintenance. Improvement to building. Any cost incurred to improve building, to improve an asset, is going to be disallowed. Improvement to industrial building, because it's expected to be capitalized. Any improvement whatsoever will be disallowed. Repairs is allowable. Renewal of tools and implements is allowable. Then construction of company's gates is disallowable, because it has to do with construction of a new asset, so it should be capitalized. How much is that? 900. Allowance for doubtful debt. We said in the last class that general provision for doubtful debt is allowable. General provision for doubtful debt is allowable. Right. So if allowance for general doubtful debt is allowable, disallowable, sorry, general provision is disallowable. We have general provision. How much is that? That's 17,400. Specific provision is allowable. Bad debt written off is allowable. Bad debt recovered is an income. So it's like they've written it off, they now got it again. Right. Now, interest on loan was paid on a facility obtained from a licensed Nigerian money deposit bank at Nigerian commercial interest rates. That's fine. So that makes it allowable. Admin expenses include vehicle running expenses is allowable. Insurance premium is allowable. Fine for driving offenses. We did not send a message. So fines for driving offenses. Please use the chat room to tell me if you are still with me.
We are with you, sir.
All right. Fines 2004-70. Right. All right. Good. Then we have other administrative expenses is allowable. Donations. The law provides that donations to anybody approved by the government should be allowed but must not be more than 10% of the accessible profits. Must not exceed 10% of the accessible profits. All right. So 12 million is what was donated. Let's check the body. Donation debt is how much? Donations and subscriptions is 48,720. So let's get the breakdown. We were told that donations was 12,000.
Donation is 15,000, sir, Abi. I'm seeing 15,000, Abi. Is it my eyes?
Allow this man do this thing now.
3,000.
Okay, donations is 15,000. Thank you. So the 12,000 is actually allowable, but the law provides that it must not exceed 10% of the accessible profit. So there's a way we are going to compute that. But before we compute that, let's be sure we've picked all other expenses. So there's nothing here that relates to expenses again, right? Other than the donation. If that's the case, let me add this together.
Sir, please, I have a question.
Please note down your questions. We will attend to all the questions immediately we finish solving. Please note down your questions. So we'll attend to all of them. So with that, we'll save time and we'll be able to maintain decorum. I hope that clarifies. All right. Then we have, I hope we've picked all with this. I hope we've picked all the allowable expenses, because once we miss out with one, we have cooked beans that way. There's going to be an issue. So now, I was explaining donation, that law provides that 12 must not exceed 10%. So now, the whole idea here is that donation should be allowed, but must not exceed 10%, right? Now, the issue here is they made laws and they are making donation, right? They made laws and they are making donation. So that will make donations first disallowed. So we have 12,000, right?
Sir, please, I didn't hear what you said concerning donation. Please come again.
I said donations, that donations should not exceed 10% of the accessible profits. From here, the company made loss and still donated. So in a way, they have flouted the rule. So we will first disallow the donations. We will first disallow the donation. Now, the legal and professional fees that you pointed, let's check. I guess we've picked every other thing we have in legal and professional fee. But let's check again. Legal and professional fee, debt collection expenses is allowable. Tax consultants fee is allowable. Renewal of shortlist is allowable. Retainers fee is allowable. The only disallowable expenses that usually fall under legal fees, renewal of long lease. It is long lease that is disallowed. Long lease is disallowed. So the next thing we now do is deduct non-taxable income. Right. Now, the first non-taxable income we have here is excess on revaluation of investment. Revaluation is an abstract figure. It doesn't involve cash. It's just a valuation exercise, right? So it doesn't really mean there is an income. It simply means that there's somebody who is saying that the investment is worth more than you put therein. So for that reason, it is non-taxable, and there you have 770. Dividend is franked investment income. Dividend is franked investment income. For that reason, the law provides that the withholding tax on dividend shall be the final tax on such dividend. Withholding tax on dividend shall be the final tax such dividend. So dividend received is 3460. So if you add the two together, you have 4,230. So we have adjusted profit before donations. So we have the net profits plus the disallowable expenses minus the non-taxable income. Then you now see donations. The law says it should not exceed 10%. So you have 10, but the 10%, because donation itself is allowable, sorry, why am I saying disallowable? Because donation itself is disallowable, so it will be 100 plus 10. That's 110. So that's 100 divided by 110. Then multiplied by 59,560. 59,560. That is the total adjusted profit before donations, right? It still does not matter whether it is net or gross. Dividend is franked investment income. So we have 10 divided by 110. Multiplied by 59,560. So I have 414.55. So that will form the allowable expenses. The allowable expenses now is 5414.55. So adjusted profit now after donation. Adjusted profit.
Sir, please, can you explain these donations again? I didn't get your computation.
Okay.
Thank you, sir.
I said that donation is supposed to be an allowable expense, but the law provides that it's supposed to be not more than 10% of the accessible profit or adjusted profit. Now, because of that, so you do 10 over 110 times the adjusted profit before donation. Please mute your mics. Please mute your mics. Please mute your mics. If you are not speaking or you are in a noisy background, please mute your mic. If you are in a noisy background, please mute your mic.
Man, they do like this now. What's up now? Just mute them. Just mute them. Mute everybody now.
Please, admin should mute them. We're not be with the phone. Admin, please mute them.
I beg. Ah.
All right. So, that you want to ask question, won't you even cook food? You are still unmuting your mic. Honestly. So the adjusted profit is 54,145, and that is because donation is 10%, right? 10% over 100, and donation is allowable. So that means donation is included. So that means 100 over 110 divided by the adjusted profit before donations. Right. So deduct.
Sorry, why do you add back 10% to that 100?
Because donation is inclusive.
10% of 59.
Now, to get what you are, to prove that you are right or wrong, if you do 10% now of accessible profit, you should get your donation back. Right. So the law says it should not be more than 10%. So donation is included in the adjusted profit. Donation should be included. And once it is included, you do 10, that's 100 plus the donation percentage, so that you will disallow it. That's the whole idea. So deduct loss relief. The law provides that loss relief gets priority over capital allowance, right? So for that reason, we have to check, are there losses that are carried forward? So we have 4 losses carried forward. That is 8290 plus 4380 plus 9800 plus 13600. All right, so we have, then we have the adjusted profit minus the loss. You know, the adjusted profit is same as the accessible profit. The adjusted profit is same accessible profit. So the next thing now is to deduct capital allowances. So we have to come here and say, what are the capital allowances that we have? So first, we now come back to our pockets. Computation. Computation of capital allowances.
In your question, the tax they write Nigerian tax rate after all the questions. You go and check to know if those assets are still in existence. But assets in 2011, you want me to calculate capital allowance for
Computation of capital allowances. So what are the list of assets that we have? We are told that the terminal value of qualifying capital expenditure. So let's pick the asset one after the other. We have industrial building. We have industrial building. We have manufacturing plants. We have motor vehicle. We have F and F, that's furniture and things. That we have total.
Please, sir, we can't see what you are writing, sir.
Sorry about that.
Thank you, sir.
Allowance. We have initial allowance, final allowance. Initial allowance is 15, 10. Manufacturing plant is 15, 25. Motor vehicle is 50, 25. Furniture and fitting is 25, 20. All right. Then we have all figures 1,000. All figures in 1,000. Figures in 1,000. We're told that industrial building was purchased in 2016. So it means it starts enjoying capital allowance in 2017. So we have 2017, 18, 19, 20. And we're doing, so we have 17, 18, 19, 20, 21. That's 5 years. So it has 5 years remaining. It means it has 5 years remaining. So where I have 84,000. We're told that 28,000. Let me first write the tax return value. 14,000 and 2,700. Right. So here I will claim the annual allowances first. Or let me do this way. Costs. New assets. The new assets purchased during the year are motor vehicle. Motor vehicle is 4,500 and furniture and fitting is 1,200. Also, in the question, they told us that they constructed gates. Construction of gates. So construction of gates is part of building. So we have 900. We have 900. Now, we were also told that there was improvement to building, right? So the improvement to building too is also an additional asset, right? So improvement to building is an additional asset that is 700. All right, let me give you two.
Sir, please, can you please, from that initial allowance, the network was poor, so I missed out what you said. Can you just tell me how you got all those 15, 10, all those figures? Is it from where, sir?
So the all of them are what you must know. Like they are the standard. So
okay. Are they the percentage or they are the amount?
percentage.
You wrote the amount. Okay, that's percent. Okay.
So we have 700 plus 900. So the 700 is the improvement to building, and the 900 is the construction of company's gates. But they both form integral parts of the building. But there were no plants purchased during the year. Now, let's now come here. Let me give you 2 minutes to ask your questions. Let me give you 2 minutes to ask.
Okay, so I have a question.
Yes, please.
How do we differentiate this industrial building from non-industrial building?
The thing
For
is
instance,
that
we have the company's building gates, and then
I will advise you to, in the exam, don't separate it because they have the same rate. In your course of separation, you might I'm not saying you might forget one at the expense of the other, and that might cost you your own mark. So I will advise you, so far it is supposed to capitalize, just add the two together and run with it. That's all.
Okay, the second question I have is on donation and subscription. So we're given a figure of 15 million. How do we ascertain what portion of that 15 million is meant for donation? And
The
then,
examiner will guide you on what portion is for what. Don't assume for the examiner.
okay. So
Alright.
they said included in donation was 12 million. Does that mean
Meaning
that the donation
million?
can be 14 million or 15,
No.
14.5 or
The
what?
examiner said included in donation is 12 million, right? So it means donation was
Yes.
12 million, subscription is 3 million. It's that simple.
Okay, not like it's a particular figure, then inside that figure we have a donation of
No.
12 million.
Subscription is different from donation. So if donation makes a sum, subscription will make the balance. That's all. Besides,
Okay, fine.
subscription is allowable expenses.
Okay, thank you.
Welcome. Any other question?
Hello,
Yes,
Hello,
sir.
ma'am.
Please, under this cost of manufacturing plant, the repair and maintenance, I'm seeing repairs on industrial plants, 300,000.
Repairs
Why
is
is it
an
not
allowable
included under this cost?
expenses. Repairs is an allowable expenses. So because it is not capital in nature, it's not renewal of plants. That's why we are not including it. Assuming they bought another plant or they renewed the plant, it should have been there. But here they are amending the ones they have. So it's not a new plant. That's why it is not included.
Okay.
Okay, sir.
Any
Hello,
other question? One more person before we go
Yes,
ahead.
I have a question, sir.
Please go ahead.
you read
The calculation for that
value for
donation.
The calculations for the donation. Okay, what's
2020,
about?
which
Yes.
we've picked, and if you look at the addition,
Hello.
Tutor, he said nobody should talk until you finish solving.
I gave room for question. If you want to ask question
Okay.
now, so that many
Yes, I
people.
was about to ask. I said that donation, I don't understand how you did that calculation to get that
Okay.
figure. I was thinking you just applying the 10% on the
No,
accessible
donation
profit.
is included. Donation is an allowable expenses. So donation should form an integral part of the adjusted profit. That's why we must add 10 to the denominator, because donation is an integral part of it. So you are doing 10%, but in this case, you are doing 10 over 110 because donation should form part of the adjusted profit. That's why you are doing it as 10 over 110. That's it.
Okay, sir, I have a question. So now, how will you now compare if it is up to 10% or not? Like, do we have another donation that is given that you use
Donation
to
in the
compare?
question is 12 million. Donation in the question is 12 million. Here is
Is it the
5 point.
additional information or the question?
This is the question.
Okay.
So since
So
donation
how are
we
we
have
going
in
to
the
compare?
question is, since donation is 12 million and
Okay.
what you have is lower than 12 million. So the lower of it is what you select.
Okay.
And that will be all.
Observation, sir.
Yes,
The
please.
percentage was 15 naira instead of 15 for the industrial building and 15 naira, sir.
It's 15%, not naira.
Yeah, 15.00.
Sorry, it's my this is doing this thing. It should be percentage. No. Sorry. I just it. All right. So
Sir,
let's
one
go.
last question, please. So what if this company did not make a loss? What if it was a net profit? Are
You
we
will
still
still have,
going to add back that donation and then take 10% of it?
I didn't get a question.
I said, what if this company did not make a net loss? What if it was a net profit? Are we still going to disallow the like add back the donations before coming to get the adjusted amount for the donations that we can disallow, that we can allow, sorry?
You know, the thing is that you must not, it's the lower of the two you are doing. So you must take note of the lower of the two. That's just the idea.
But
So
if there is no, if there is a profit, are we adding back the donation?
the same way, add back the donation and do it. You get the same answer. The thing is, it must not exceed
Network.
10%. It can be lower than 10%, but must not exceed 10%. All right, thank you.
Ouch. Okay.
That's all. So please feel free to wait for the next window. So we have initial allowance. And for the initial allowance, it is the initial allowance rate times the cost of the assets. Right, initial allowance rate times the cost of the asset. Please mute your mics so that won't initial allowance rate times the cost of the assets. All right. Then we have annual allowance. So I will have two annual allowances. Let me do the annual allowances for the new asset first. For the new, because it's an ongoing business, it is the annual allowance rate, right? Annual allowance rate times costs minus the initial allowance. And that's cost minus initial allowance times the annual allowance rate. So, correct that. Why is this thing on your jacket? Why made a mistake anywhere? 2, 5, 8. So yeah. Okay. Oh, okay. So the total now is the addition of the allowances. Then I have annual allowances, old assets. Now, for the old asset, you have to be careful of the tax written down value. You have to be careful of the year of the tax written down value. All right. So let's look at it together. The asset motor vehicle was purchased in 2016. Since it was purchased in 2016, you have to check it. From 2016 to when? So he started counting capital allowance in 2017. It was purchased in 2016, but he started counting capital allowance in 2017. So you have 17. I'm counting my fingers. Please follow me by counting yours. 17, 18, 19, 20, 21. What you are doing now is for 2022, which is the 6th year. So it means it has 5 years remaining. It means it has 5 years remaining. So what you do is tax seasonal value divided by the remaining useful life. Tax seasonal value divided by the remaining useful life, right?
I'm lost from this industrial building. Please, you are done. Can you please recap it when you are done, sir? I'm lost.
Where do you lose?
From that tax seasonal value of 84,000 and that cost 1,600. I think one is new and old, right? But I don't know how the 241, 36, and 16, how you went about that, sir.
No, I just applied the formula. Cost minus initial allowance times the annual allowance rate. Initial allowance is initial allowance rate times the cost of the new assets. So, are you asking how did I get the cost of the new assets? Is that what you're asking?
Hello, can you? Sir, that place there was a break in transmission. Please come again.
Are you asking how did I get the cost of the new assets?
Yes, the annual allowance of the new assets, sir. I think that was what you used the formula for.
Yes.
Cost minus initial allowance over annual allowance, I think.
Times the annual allowance rate. Have you engaged? Do you understand capital allowance?
Sir, I didn't get it.
I was asking if you've understood capital allowance.
Yes, I've understood it. I just want to write out the formula.
Okay.
Cost minus initial allowance times.
You are doing for
annual allowance
2023,
rate, right?
you are doing for 2022 year of assessment, not 2022, not 2021 year of assessment. Your calculation is for 2022 year of 2021 year of assessment. What you are doing is for 2022 year of assessment. That's our year of assessment. So it's the year of assessment that determines titilayo.
I beg, Mona, leave this thing. Make him finish. Now we ask a question. Now they ask this thing like I never do this thing before. Let him finish, then you ask your questions.
No cause for alarm. So now for my industrial plant, it has used how many years? Let me count. It started counting from 2019 year of assessment. So you have 2019, 2020, 2021. So it has used 3 years. This is the 4th year. And ideally, industrial plant is supposed to it's supposed to use 4 years normally, right? So because it's supposed to use 4 years normally, and this guy has used 3 years of the 4 years. So what you just need to do is to deduct 10 naira from the value of the asset. Is to deduct 10 naira from the value of the asset. But we were now told that it is 2 assets that are there. So for 2, it's going to be 20 naira. So what you have is 28,000. 20,000 minus 100 is 0.02. All right. So that's how you get your initial annual allowance for this. Then for motor vehicle, 2020, 2021, that's 2 years, remaining 2 years. So all you just need to do is to divide the tax exempt value by 2 because it has used 2 years already. Right. Now, then we have F&F. F&F is 2007. So 2007, how many years has it used? It has used 2 years and it's supposed to use 5 years. So you do 27 divided by 3. All right, so that will give you the total no allowances for the new asset. Then you have your tax deductible value. So for tax deductible value, you are doing costs plus, tax deductible value of the old assets plus the addition minus the initial allowance minus the annual allowances. Right. That's how you get that. So it means our total capital allowance is 56 368.48. So I will come to my solution. See computation of capital allowances. So where do you have 56 364.48? That's the total capital allowances. 368.48. That's total capital allowances. Now you have to check again for the nature of the business. You have to check for the nature of the business. So because the nature is going to guide us if capital allowance is restricted or not. Capital allowance is restricted to 2/3 of accessible profit apart from manufacturing and agro-allied businesses. So we are told that here we have is a manufacturer. So the word manufacturer means is not restricted, right? So utilized capital allowance. Now, the capital allowance issue is an issue of you cannot give what you don't have. He has a profit of 18 million. So he cannot do more than the profit that he has. So he will do 18,075.45. Same will be taken from here, right? So it means unutilized capital allowance is how much? 56 plus this, and then your total profit is 0. All right, total profit is 0. So we can now come and then do computation of tax liabilities. Right, so we have company income tax. For you to determine this, you have to check what is the nature of the revenue, because we have 3 classes of company. We have the small, we have the medium, and we have the large. So for this company, the revenue is 382 million. So it's more than 100 million. That means it is a large company. So company income tax is going to be at 30%. So if it is at 30%, so 30% of 0 is what? 0. Then you have tertiary education tax. And it is going to be at 2.5%. But beginning from 2024 year of assessment, it is now 3% of accessible profit. So we have 2.5% of where is accessible profit? Accessible profit is 54. So total tax liability
54,000.
is right. Once you have turnover in your question, the examiner require you to compute minimum tax.
Minimum tax.
So minimum tax provisions or computation of minimum tax. Our minimum tax is 0.5% of turnover less franked investment income. But let's check this question. How did this guy prepare a statement? He said miscellaneous income was made up of. So it means the turnover did not include frank investment income. The turnover is 600, 400. So because it does not include, I am going to do 0.5% minimum tax at 0.5%. I didn't say 0.5 of, I said 0.5% of turnover. So in this case, the turnover is 600, 400, right? So that's 0.5% times 600, 400, right? You have 3002. Then tertiary education tax at 2.5%. I repeat again, beginning from 2024 year of assessment, tertiary education tax is 4%. So total tax liability under minimum tax provision is 3,002 plus 135.6. That's on period.
So the turnover is different too.
What's the difference?
The
turnover
turnover
is not 600, 400.
to 500.
Hey, sorry,
3,800.
500, sorry.
And sir, please, there's unrelieved capital allowance brought forward.
Is there, where is it?
Down, after the additional
15.2 million.
15.2, I was chatting you.
Oh, sorry. Where is it? Who can you leave capital allowance? It doesn't affect anything, only but this. So let's do something like this. Yeah. Unutilized capital allowance brought forward is how much? 15,200. So we have total capital allowance. Okay. Before we then review. So that's the effect. So yeah, it's going to be, yeah, that's the effect. Thank you very much for that. God bless you. I appreciate it.
So miscellaneous income.
Yeah. Yes, I didn't get you. Oh, please shoot.
Miscellaneous income. From the additional information, they said it contained other income, dividend, and excess on revaluation. So How are we going to recognize that under the minimum tax computation?
Now, which note are you reading?
Note 1.
Note 1. We were told that miscellaneous income was made up of excess on revaluation of investment, dividends received, and then other income. The three of them are exempted from computation of withholding tax. But this guy did us a favor, right? He did us a favor by removing it he separated it in the computation. Most often, you would have the guy say turnover would have been, gross income would have been 382,500 plus 11,060. So what you do is you can add the two together, then deduct Frank's investment income. But wait, did they give us the composition of net income? What the other income includes? They give us
What's that?
the other income. What is the composition of other income?
They did not give.
They did not give, so it will be included in the computation of minimum tax.
They did not.
Okay, since they did not give, so we are not going to assume that it is Frank's investment income. So that is just it. If they did not give, but assuming they gave us the title they give us would have informed us as to what exactly it is. Do you understand what I just said?
Yes, sir.
All right. So any other thing? So let your questions start coming in.
So my own thing is, the first thing is, please, I want to screen record the question. It's not showing in full on the screen. So can you please help me scroll to the beginning? I want to screen record so that I can cover everything and the solution. That's just what I want, sir.
Just check the link now. Everything is there.
The question is May
sir.
2022 question 1. The solution is in the link I sent across. But
Sir, please, my question is: at what point do we calculate a minimum the minimum tax? You made a statement about where
whenever you have your turnover, you compute minimum tax.
Okay, then you also said from 2024 assessment year, the
education tax is 3%.
3%. All right, thank you.
Okay, sir, please, I have a question. Under the allowance and for doubtful debts, bad debt recover, since it's an income, I thought it should be added to other income.
No, it was expensed before.
Hello, sir.
Yes.
As bad debt?
Yes, it was expensed before. So it's just like they retrieved it. So it was expensed before. Now they're getting it. So it's like if you go to the expense account and nil it off.
Hello, sir.
Yes.
So, sir, you said something. I was trying to jot it, but I could not get it. You said in the case of manufacturing sector that there is something not exempted. Please, can you please repeat that part? I want to jot it out.
Capital allowance is restricted to 2/3 of accessible profits. Apart from that of agro-allied and manufacturing companies.
Okay, that means those two is not restricted.
Exactly. Any other word?
Yes, sir. Sir, please, that minimum tax computation, the 0.5% of turnover. I don't know, the figure you wrote there, I don't know how you...
382,500 plus other income. That's how I got the figure I wrote there.
Plus other income. Okay.
Hello, sir.
Yes, ma'am. Yes, please go ahead.
Question, sir.
Yeah, please go ahead.
Okay, sir. I want to ask, between this minimum tax and the first one, which now, if we are between the two.
So you are picking the higher of the two.
Okay.
Yeah,
Not the
higher.
lower.
No, the higher.
Okay.
The tax
Thank
authority
you, sir.
selects
Please,
the tax liability.
the minimum
All
tax,
right, sir.
0.5 of revenue and what?
Revenue, the law provides that 0.5% of gross income less frank investment income.
Okay, and what again?
That's all.
I thought you said
Hello,
we are
sir.
picking the higher of the two.
Higher of what? I'm not sure I got your
The
question.
min- Sir, you said the minimum
In
tax. When you were saying
determining the
something, you
tax
said,
liability, we are
okay,
comparing this, the company income tax liability normal
okay, okay,
basis with this.
okay,
So whichever
okay,
is higher will be the tax is going to pay.
okay, I get it.
Hello,
All
sir.
right. Yes.
What happens if dividend is stated as gross?
It doesn't change anything. Withholding tax on dividend shall be the final tax.
Oh,
Hello, sir.
Hello, sir. Can you hear me?
Yes, I can hear you.
Okay, so for the minimum tax, sorry, we're asking too much question on that. But for the minimum tax, since we are doing, the formula is 0.5% of turnover less frank investment income. Then in this question, we are giving turnover to be
So I mean,
382.
if the frank investment income were initially included in the turnover.
Okay.
So if they were initially included, I know where you are going to. So I should deduct it.
It's not.
So it is
Yes.
if it was initially deducted, that's when initially added, that's when you deduct. For this case, the guy separated it, so we not deduct.
So why are we adding other income? Other income, is this
Because
also part
other
of
income is
turnover?
not frank investment income. Other income is
Other
other income. Frank investment
in the
income
what?
is other income is other income. It's not frank.
But
Okay, frank is investment income is only dividend, right?
Dividend,
yes.
interest, and income earned from abroad and abroad through appropriate channel.
Sir, please come again. There was a break. Dividend income.
Dividend income and income earned from abroad and abroad through appropriate channel.
And what? The third one is what?
Income earned from abroad and abroad through appropriate channel.
Okay, through appropriate channel. Okay.
Any other question?
Hello, sir. I have a question.
Sir, please, can you give us the link on the WhatsApp group too?
Which link?
The link to the solution.
Yeah, it's on the WhatsApp group already. You should have it naturally.
Sir, please, can you recap on the annual allowance? How you got it for the capital allowance computation?
I just computed basically annual allowance. That's cost minus initial allowance times the annual allowance rate.
I didn't get how you did divided by 6 for the first assets.
You check from the year.
I didn't understand that.
You first determine what is the total estimated useful life of the assets. Then you now determine, are you with me?
Yes, sir.
You determine first what's total estimated useful life of the assets. Then you now determine what is the remaining useful life of the assets. Those are the two things you consider. First, the estimated useful life. Second, the remaining useful life.
So we're divided by the remaining useful life.
Exactly. So that's taxable value divided by the remaining useful life. Is there any other question or questions?
Yes, sir, there is. Good evening,
Yes.
sir.
Yeah, please go ahead.
I don't know if you can actually scroll down a little bit to the
Which of
workings. This is the first time. The workings, sir,
your first time?
for the ask. This is my first time, like attempting this course.
Wait, you mean first time in tax class?
No, this is my first time attending, not like this class per se, but attempting to write tax as a
Okay, okay, okay,
course.
okay. Okay, okay, okay.
So I noticed you wrote new and old, and it's not like there's something like that in the question. I don't know how you arrived at that. If you can explain it better.
What was that? What did you ask? Say?
This new, you say annual allowance new, then annual
No, it's just
allowance.
separation. It's just a kind of separation, trying to separate the old from the new. You know,
Okay,
like trying to separate the wheat from the chaff, you get. So just trying to separate the new from the old. It's just a way of identifying for myself. You know, we have an allowance for the new is the tax is based on the cost. An allowance for the old is based on the tax return value.
okay.
Do you get that?
Okay, yeah.
Yeah, so that's it.
So it's mandatory. Is it mandatory or
You can do it
one
anyhow.
can
Just make sure you get good answer. It's not mandatory you follow this like new and old, but make sure you get the correct answer.
Okay, sir.
All right.
Thank you.
You're welcome.
Sir, how did you get the 27,999? I thought you wanted to deduct 20 naira from
Yes, you know, all
28,000.
figures are in thousands. So 20 naira in thousand means 0.02. All
Hello,
figures.
sir. Please, sorry.
Yes.
Are you done?
Yeah, you can go ahead.
Okay. My question is on that 0.5% of the turnover. What I got is 1,912, but what you have there is
I
1,009
added other
is more
income to
than
it. I added other income to it.
I missed that line though. Is there a way we can know what you added? Maybe as a comment on that line, you can just write it in front. Sorry.
No wahala, man. Done. Any other question?
Good evening, sir. I have a question.
Please go ahead.
Yes, on the additional information, the unabsorbed losses from previous year, what's the significance of that part?
Yeah, you know, losses should be relieved before capital allowance. So all of the losses were what we added up and gave us this amount.
I didn't know eventually. Oh, okay.
All the
Thank you,
losses
sir.
were, yeah. You're welcome.
So, sir, I want to get that part. That minimum tax, 0.5% of turnover plus other income, Abi.
Yes, yes. Any other question?
So please, the solution of this question is not on the group chat. Please, the solution of this question is not on the group chat.
Yes.
So please, I also want to, I also observe that we don't drop the notes of the lecture on the chat, like maybe the PDF, the theory parts. We still have to go to.
That's why you need to be in the class to get the explanation. and then follow up with the video. It will still be explained in the video, except you want to get the textbook or the compilation. Do you understand?
Okay, there's a textbook on that.
Soft copy, right? Correct. Soft copy only.
Okay. I'll chat you on that.
No worries. Any other question?
Hello, sir. Good evening. I want to ask for
Yes.
the minimum tax that we calculated. We see
Yes.
that it's more than the other one. So in this case, which one will this company pay?
The minimum tax.
Yeah, we computed minimum tax to be
Select the higher of the
3,300.
two. The whichever is higher is what the company will pay. Our minimum tax
Okay.
is higher, so you select minimum tax.
Wow. Okay. Thank you.
You're welcome. Any other question or questions before we call it a night? In the absence of question or questions, do enjoy the rest of your night.
Sorry, sir, I have a question, please.
Okay.
The tertiary education tax of 2.5%, if it was a year of assessment for 2023, are we going to use 3% or still 2.5%?
2024, 3%.
Okay, sir.
All right. Thank you.
Then lastly, sir,
Okay.
you said for us to know if we are calculating minimum tax, any company we are dealing with, we should check whether we are giving turnover.
Yes.
Okay, sir. Thank you, sir.
Any other?
Hello, sir. Please scroll down.